Okay, so today we have a recap on the trades we took today. Went 3 for 3 as the market went with the buyers pretty easily, and using my AMD model. So going to the weekly first in a higher time frame, you see that from February, the beginning of February's dump, right? This key level was taken out here, so it was taken out overnight. So, your job during key levels to see the reaction of prices is going to respect PD arrays for the bullish or the bearish side. All right, so let's go down to the 15 and rewind this a little bit. All right, so okay. So we have Asian session right here, right? So Asian session is usually the period of accumulation, all right? And I use that as a setup of the AMD model: accumulation, manipulation, then distribution. So if price goes into a PD array to the low of the Asian range, I would be expecting price to now distribute towards Asian highs, okay? And ironically, you also have the new week opening gap, which perfectly aligns with the top of Asian range here. So, okay, like I said, overnight, price got taken out. Okay, not only the Asian range, but the external low, weekly low. Okay, so now what happens during New York Open? Because you always want to wait for market open, because they like to at least test the lows. But it didn't only not only did it test it, it made new lows. Okay, leaving behind these fair value gaps right here. Okay, so as you see, I had this entry. Have my entry after price now recovered a little bit, and these fair value gaps is volume and displacement, momentum in one direction. So we had a lot of the bearish momentum, but now as price recovered, and how I see the inversion, this turns into a inverse fair value gap as the buyers now overtake the sellers in this situation here. Okay, so price rolled up, okay, and it goes into this breaker right here. Now, of course, I'm targeting Asian highs, but I took profit here and got out of the trade as it failed to close above this breaker. And let me just explain this breaker to you. The breaker is first an order block. As you see on this 1 minute candle here, we have a bearish order block, right? But now price comes back over, closing above this order block, now violating this order block. That now that's the term that makes it now a breaker. So because it broke this order block, so now instead of being a bearish order block, it is a bullish breaker. Okay, draw this all the way over, and as you see, it's being respected. All right, so that was the first trade. Okay, now after that, the next trade isn't till PM session, because I'm not trying to, I'm not going to enter a trade after around 11 o'clock. I drew this because of low resistance liquidity here, but let's go way further. Okay, so let's go over what was happening here. All right, so we obviously have higher highs and higher lows here. Obviously, bullish sentiment. Okay, but we're just waiting for an entry model here. So once again, you have LRLR building up right here. Now the thing about LRLR, you know that 90% of the time this is going to get ran, right? But after it gets ran, is it going to continue, or does it just run this for the liquidity to go underneath. So once again, you got to be patient and see what is happening there. It gets ran here, right? But then just to go down. All right, when it goes down, we have that fair value gap, and then as you wait, we have a V-shaped recovery, causing an inversion now. Once again, the buyers here have overtook the sellers at this price point. My target is the new week opening gap, but once again, you know, we failed to go all the way into the gap. So I took profit at 70 points, got out of the rest at break even. Okay, and price comes down a little further, but then to fully recover, okay, and now close above this order block, because this is actually an order block here, a bearish order block. After it closes above this bearish order block here again, and then above some more inversions, we're back in this trade again for the final take profit at the new week opening gap. All right, so 3 for 3 in these plays. New week opening gaps are really important for the draws, just like that we had new week opening gap being filled Friday of last week. They are almost always filled by the same week. So what we can see here now, if we zoom out to the 4 hour, we're looking for the rest of the week, being that this major external liquidity area was taken. I'm looking for the rest of the week to be bullish, at least until Wednesday. Okay, I'm gonna see how price reacts to this 4 hour gap right here. This is a major area to tell us where it's gonna go. All right, I would expect price to at least go to consequential encroachment, and then see what it does from there. Okay, once again, waiting for the higher time frame bias to play out, and seeing what price does at these key levels. That's how seeing how it aligns with the lower time frame models, like in the 1 minute, seeing how price respects the PD arrays, like the fair value gaps and the breakers. All right, so that's how we went 3 for 3 today. Tune in for the next one.